on a year-on-year basis. So that's one big saving that they've done out there. The power and fuel cost should come up for you, which is good. The other one is the other expenditure, which is also down close to around 11% on a year-on-year basis and down 11% on a sequential basis as well. So two big costs where they have saved out there. Power and fuel costs down 8% sequentially. When you have a big bump up on a year-on-year basis, yet you're seeing that power and fuel cost is down, other expenditure as well as down, and the top line is much better. But Abhijit is with us. Abhijit, what do you have to say of these numbers? It's looking like a very, very good set. The stock is at a 52-week high. Maybe now we know the reason why.
Yeah, definitely the numbers are above expectation. If you see the standalone numbers, the standalone EBITDA has came at around 4,860 crore, close to that, which is a beat of 28% versus our estimate. And that has primary reason for the beat in the standard PAT also. So these numbers are quite strong. We will wait for any one-off which they have been reporting in the past quarters, where they have there may be some benefit of low-cost coking coal inventory which they have built up in this quarter. So that has to be looked upon in the management commentary.
You know, Abhijit, I'm just wondering, such a big beat, if there is no one-off, then this is absolutely a blockbuster set of numbers, though the stock on a valuation front and even on the stock price movement, it's trading at very elevated levels, even on a price to book multiple. The power and fuel cost is down by close to 15%. The other expenditure as well is down more than 10%. This on a higher top line. What kind of a savings were you factoring in on the power and fuel cost?
So basically, the key raw material cost was coking coal. So it was anticipated that it will have a negative impact because of the higher cost.
All right. There seems to be some problem with that line. Abhijit, our team is going to try and reconnect, but we get what you were saying. And like Nigel was pointing out, definitely seems like a very good set of numbers based on what we do have. Nigel, you want to come in with anything else that we were tracking? I mean,
no, I'm just looking at the the breakup as well. The JSW Steel and coated business out there, in fact, they've done close to around 400 crores. So it appears besides the core business, that's a standalone business, you also have the other smaller verticals that have done well. We'll try to come back with further details, but for the time being, this number looks good. We'll try to get in further clarity in just a bit. But a beat on the top line, because it appears that realizations were not as weak as expected and the input costs have cooled off. Power and fuel as well as other expenditures lower. That's why there's such a surge in terms of the operating profit as well. Pavitra?
All right, Nigel, thanks a lot for helping us, break down all of those numbers. That is JSW Steel. The stock has spiked up 2.5% higher on that one, almost 2.2% higher right now.
But there's cost to flutter in Tata Steel also. I mean, if you can have the intraday on Tata Steel up, it's a sharp spike higher on Tata Steel.